evening and welcome to another edition of Capital Market Live on Channels Television, where markets speak and we bring you the facts behind the figures. I am Will Ibang. Let's break down what's driving stocks, bonds and investor sentiment, and we begin with markets outside Nigeria. We start with Europe, where stocks ended higher on Friday, building on momentum that has pushed regional indexes higher this week. We saw the pan-European stock 600 climbed, closed up, for the week, 0.5%. Major bosses across the region saw made gains on Friday. We see London FTSE up 0.67%, the DAX in Germany down, however, trading in the opposite direction, 0.18%, and the CAC 40 in France was trading up 0.31%. Let's look at Asia markets and see how they performed. Shares of Japanese conglomerate Hitachi closed over 10% higher on Friday after it announced late Thursday a partnership with OpenAI to build artificial intelligence infrastructure and data centers globally. Japan's Nikkei 225, we saw that climbed as a result of that news, 1.85% to close at 45,769 points. Hong Kong's Hang Seng Index, we saw retreated, trading in opposite directions, 0.54%. And we saw Chinese markets, they were closed for holidays. Let's check in on the U.S. market. We see the S&P 500 retreated from a record on Friday, but held on to solid weekly gains despite a U.S. government shutdown dragging on for a third day. Now, the broad market index closed little change. We saw it ticking up just above 0.15%. We saw the Dow Jones, the S&P 500 ticked up 0.01%, Dow Jones up more than 0.5%, and the Nasdaq futures down 0.28%. And now these markets are trading, expecting that the shutdown is not going to drag on, but apparently investors are overlooking that anxiety, hoping that the government, as the shutdown entered its third day, that the stoppage has only exacerbated concerns that this year, that the macroeconomic issues, policy headwinds will not be at risk and it won't impact on the economy. It's going to be short-lived, but we'll watch and see how that plays out. Let's see Nigerian markets now. They begin with the NASD markets, where we see Securities Exchange closing lower for the week as the index fell by 2.73% to settle at 3,448 points. Market cap stood at 2.06 trillion naira. Let's look at trading activity. It was mixed. Volume jumped 121% to 15.53 million units. Traded valued at 175.49 million naira and all transacted in 76 deals. Now look at the performance, price performance. We saw mixer real estate emerging as a sole gainer, rising 10% to 6.68, 6 naira 68 kobo to close for the week. We saw on the loser side, that was led by CSC, that's the Central Securities Clearing System, which fell by 25.69% to close at 13 naira 84 kobo. So Lagos Building Investment Company down 9.93% to close at 2 naira 63 kobo. And we also saw UBN Property also on the loser side. Now for the top traded stocks, we saw for the week, Purple Real Estate Income, Double One PLC, and Central Securities Clearing System made that top three. Now let's look at the big guy, always coming after the NASD, the NGX market. You see that positive performance after trading, it was a holiday shortened week. The all share index, we saw it advancing by 1.02% to 143,584 points. Market cap also climbed 1.31% to close at 91.135 trillion naira. And that weekly gain in terms of activity, investors exchanged 8.4 billion units of shares. A green close on the volume there. However, the market value is still slipping to 115.5 billion naira and value in over 115,000 deals. Now, both we saw that closing, that's value and deals closing in the red. Sectoral performance was mixed. The banking index added 1.17%. Industrial goods gained the most. We saw it at apart from the oil and gas, which was the outlier there, 5.68%. We saw industrial goods at 1.66%. Consumer goods ticked up 0.13%. Insurance was the one that, the laggard dragging in negative territory to close for the week. Top gainers, let's look at them for the week. We saw a Turner PLC rallying 32.8% from 27 naira, that's its open 27 naira 50 kobo. It closed at 37 naira 5 kobo. That's on the screen there. We see on the losers chart, the heaviest declines came from Julius Berger. See it's 17.79% down to close at 122 naira 90 kobo. And International Energy Insurance also shed about 11% there to close at 2 naira 97 kobo. Meanwhile, Cornerstone Insurance, Fidelity Bank, and UBA, they led the activity charts as the most traded stocks for the week. There we go, 3 of them on the screen. Now, more news coming in now. We see the central bank governor, Mr. Olayemi Cardoso, saying that growing adoption of cryptocurrencies and other digital assets in the country requires better understanding in the financial market and in order to protect investors, particularly the youth. He made this known yesterday as a keynote speaker at the CBN's governor annual lecture series hosted by the Lagos Business School. Now, I recalled how Nigeria was thrust into global crypto prominence 2 years ago when regulators struggled to manage coin exchange markets, with the country ranked among the largest crypto trading hubs worldwide. And Mr. Cardoso also mentioned that the CBN is now working in partnership with the Securities and Exchange Commission to develop a sustainable regulatory framework for digital currencies in the country. Let's take a listen.
We were regarded as having, I don't know how true it is, but some of the statistics that came out put Nigeria as number 2 in terms of cryptocurrency trading. I don't know how true it is, but certainly the volumes of crypto are very large. And as a result of some of those things, of course, the Securities and Exchange Commission have started the process of putting a framework around that. And to be frank, we're deepening collaboration to ensure that all the different regulatory authorities can midwife a process that is sustainable with respect to digital currencies.
And that's the CBN Governor, Mr. Olayemi Cardoso, speaking on cryptocurrencies there and how we can better understand that market. And we have to discuss this and more. Mr. Olatunde Amolegbe is the MD, Managing Director and Chief Executive Officer of Arthur Stevens Asset Management, is going to be breaking down more of what happened this week. It's good to have you join us today.
It's my pleasure. Thank you.
I'm sure you heard what the CBN Governor talked about in terms of cryptocurrency. It's like the CBN Central Bank is beginning to open up to the fact that cryptocurrencies are here to stay, and the market, we need to understand it so that they can better regulate it. In your opinion, the framework, that's the collaboration they're having with the Securities and Exchange Commission, how do you think this framework, what do you think it's going to look like?
Okay. According to what the CBN governor has said, that was an asset class that wasn't taken too seriously at the beginning, but it's clear now that given the size of participation in Nigeria, particularly amongst the youths, and the size of that market and its systemic importance, it's clear that it is not one that regulators can afford to take for granted anymore, and that is why you see the CBN governor say what he has to say, in terms of putting up a regulatory framework to ensure that that market operates in an orderly manner and does not constitute systemic risk to the entire financial system. Don't also forget that in the recently signed Investment and Securities Act 2025, emphasis was given to digital assets such as cryptocurrency and the likes, and the powers to regulate that market was emphasized for the SEC to carry out. So the collaboration between those two bodies should help to bring fairness, transparency, and order to that market so that it operates in a proper manner, just the way the other regulated markets are operating. Because what you want to avoid as much as possible is a system that is outside regulation, but is big enough to constitute risk to the entire system as a whole. And so I think that the direction that the CBN governor is going is a good and welcome one. And you will see that a lot of people, particularly young people, that have invested in this asset, because they are easy to access, and they believe they understand it. But a lot of them have also gotten swindled, from participating in it. And really, at the end of the day, there's nobody for them to run to say, can you rescue me? Can you solve? So by the time we put in place these structures, the operators of the markets will now operate in such a manner that if something were to go wrong, the investors and the participants are
protected.
Yeah,
that's fantastic. We hope that comes into play very soon, because this crypto, like you say, we can't escape it. It's something that's come to stay, and we see other climes really bringing out frameworks and regulations to be able to harness it and make sure it works for their countries. But speaking about what else the CBN is planning on regulating or taking charge with, CBN is making big changes in the fixed income market. I was saying that it's saying it wants to take over the fixed income market. What does it mean by that?
Well, essentially, my understanding is that what the CBN is saying is that at present, the settlement structure for fixed income instruments in the economy already resides with the CBN. All right. What I believe is now going to happen is that even the trading and the matching of security trades will now also reside at the CBN. Now, it's clear that that is an unconventional move, because typically you do not have situations where the regulator is also essentially the one providing the platform for trading. Typically, regulation and trading are better separate, because it ensures liquidity, it ensures smooth running of the marketplace. But we are clearly in an unusual situation in the country right now, where the CBN is saying that the fixed income market as presently constituted isn't as transparent as it would like it to be. And it has also said that we are seeing a divergence in monetary policy, which is the primary purview of the CBN, is not translating properly into what is happening in the marketplace. All right. So, and if that happens, the CBN cannot just fold its hands. It has to do something. So while this is unconventional, it is every jurisdiction have the need to evolve systems that works for it. It might not follow what is conventional or what is globally recognized. But my expectation is that this taking over of the fixed income market will only be for a period. I expect that in good time, that trading aspect transits back to an independent platform.
Or do you think it's going to give the CBN better oversight of the capital market, of the fixed income space?
Oh, absolutely, within the period, because both settlement and trading will now reside within the CBN, which means it has direct control and has direct visibility as to what is going on in that marketplace. So, the expectation is that transparency will improve, accountability will improve. Also, the transmission of monetary policy to markets will also improve, because they are now all housed under one roof. But obviously, there will be some other disadvantages that might come with that. Some investors might read it as being an overlord, if you will, on a market that is supposed to be independent.
But are they not taking jobs away right now, because we know that banks and maybe say brokerages or people, fixed income houses, with the trading houses that you were involved in it, are going to be losing that right to trade? Is that not taking away the jobs of people that are already doing this before?
Well, I mean, we will. I guess over the next few weeks, we will see what the structure will look like. And who are the people that are going to be allowed to participate in that space. As I mentioned, the banks, the brokerages, the asset managers, interdealer brokers are participants in that ecosystem at the moment. My expectation is that the structure that should be put in place should be able to accommodate most of the players in that space at the moment, such that none of them is left behind. So, but we'll see the details as they emerge in the next few weeks.
Definitely, we'll see how it unfolds. We'll take a quick break now. When we come back, capital market continues. Don't go away. Welcome back. If you're just joining us, this is Capital Market Live on Channels Television. I am Will Ibang, and we have in our studio discussing the issues or events that have taken place in the capital market, especially with the CBN governor talking about taking over the fixed income space and clearly looking at more oversight there, transparency, and making sure that inflation, and to keep an eye on inflation and interest rates. I think the CBN governor is trying to see how they can manage that space better. But we'll see how it plays out. But Mr. Amolegbe, MD, CEO, Arthur Stevens Asset Management, is still with us in the studio, and he is going to be discussing more. More things came out this week. A lot of, we heard the minister, that's the presidential chairman on, on the tax reforms. That's Mr. Taiwo Yedele talking about 150 million annual capital gains, exemption in capital gains tax for investors. What does it mean by this, and how would this impact or affect retail investors in the capital market or in the equities market space?
Yeah, you see, the tax reform is a significant change in the way, things are run in the capital market over the last few decades. I will say overall, it's a welcome change, because of its impact on, the fundamental macroeconomic circumstances of the country. But it is also a reform that needs to be handled. Its implementation needs to be handled carefully, and the breakdown of it needs to be explained to both the participants and the investors very carefully, so that people do not misread the intentions. The 150 million rebate, for me, further clarity needs to be provided regarding it. Is a 150 million cap for all investors, both retail and institutional? Does it mean that, gains above 150 million are the only gains that will become taxable or for the capital gain tax? Or those details we need to be provided. I know that Mr. Oyedele had a session with the stockbroking community and the capital market community sometime next week. I'm aware that further engagements have been arranged, and I'm actually happy that those engagements are happening now. We still have a few months before we start talking about implementation, and quite frankly, there are lots of questions that still need to be asked, and I'm sure that he will be able to provide clarity, because obviously stockbrokers do not act on their own portfolio alone. They also act for investors, and they are the ones that will typically get these questions from the investors as to the implications of some of these policies. Okay. So it is very important that the stockbrokers are very clear as to the implications of some of those policies, so they can just transmit it.
Okay, so just a bit of from what we understood from what Mr. Oyedele said, is that if you sell shares in Nigeria and you won't pay tax if it's your first 150 million naira, that's the gain. You make a profit of 150 million naira each year. But if you reinvest that gain back in the markets, like say maybe in the fixed income, maybe not the equity market, you get a tax discount, 12, 25. Instead of paying 30%, you pay 25%. So I want to really know how this will benefit investors, especially those retail investors that don't even make up to 150 million. I know if you don't make up to 150 million, you don't get to pay the tax at all. You get exempted. But how does this really benefit investors, and would it really bring in foreign portfolio investors?
So for retail investors, from the reading you have mentioned now, it is assumed that as a retail investor, if your gain is up to 150 million, then you are tax exempt. So you don't really need to worry too much about the tax implication of what we're doing. We must understand the fact that when you have a progressive tax regime, the implication is that the tax burden tends to be shifted from the poor and the middle class towards the rich. So which goes to say that if you are able to accumulate a gain of 150 million in the marketplace, you really cannot be classified as poor or neither middle class. So you have to face that tax regime. All right. So those are the people that need to really worry too much about it. And regarding the foreign investors, the truth of the matter is that if you look at other jurisdictions, this sort of arrangement is what subsists. All right, when you make money, there's capital gain tax. So we are just introducing it for the first time in Nigeria here. So I'm sure that most of the foreign investors will not find this strange. They will probably consider it as Nigeria moving in the direction as to what actually already happens in other international markets. So I'm sure that they will be able to find a way of working it out to ensure that whatever they are doing, is still profitable to them. One of the implications that is clear to me, all right, is that what you are likely to see is that the portfolio investors will most likely have to start considering more medium to longer term positioning in the marketplace, as different from what we used to see where there was no tax. So a portfolio investor, to all intents and purposes, could invest today, and in 1 month or 2 months feels that they are made enough, they are sell and they are out. But because now we are looking at, beyond your capital gain, you are also looking at, a 25% or 30% capital gain on the returns, and you know that the longer you stay in the market, the chances are that you make more gains. Then you probably have to shift your investment horizon to ensure that you make enough gain such that you can carry the costs, you can carry the capital gain tax, and still go away with a healthy return. So what you are going to see is that the foreign investor will recalibrate the tenor or the horizon of their investment in the country, which for me is not a bad thing. Okay,
so we've just Q4, the last quarter of the year. We're in it already. It's kicked off, this month. What is your expectation, your outlook for equities? What asset classes should investors be looking at? Where should they be positioning in to, better take advantage of the last quarter and maybe have a better December?
Okay. So typically, historically, the last quarter of the year is historically positive because you are looking at situations where asset managers, portfolio managers are doing portfolio rebalancing and the likes. And then if you also look at the direction of the macros, the macroeconomic indicators at the moment are actually moving in the right direction. You see the foreign reserve growing. You see inflation tapering down. You see, the CBN now signaling that they most likely will be dropping interest rates. All of that are generally positive for the equities market. And if that continues, you are likely to see them reflect in stock prices in a positive manner towards the end of the quarter. One thing that is also clear is that we are seeing more and more participation, particularly by local institutional investors. All right? So if that trend continues, if we continue to see, on average, the local institutional investor seems to be, ranking higher compared to the participation by the foreign portfolio investors and even retail investors in our market. If that trajectory continues, and I expect that it will continue, that will also be positive for the equities market.
Well, before I let you go, very quickly, just your opinion on this. We saw there's a report that just came out. Renaissance Cap is saying that Nigeria, that's the Naira, is overvalued by about 30%. It's feeling that high inflation, that the inflation rate we have there it ought to be possibly around 12%. That is more than what, it's less than what we have in the books, about 20% right now. It should be lower. And then that's what's keeping the reserves strong. And that's what's strengthening the Naira. There's kind of like a bubble right now that once CBN starts lowering interest rates, that we will see the Naira weaken to its real maybe value. So do you share this opinion, or what do you see for the Naira in the last quarter?
Okay, so analyst reports like that are typically made up of all manners of assumptions and forecasts. And typically, it's always better to get the analyst to come and justify what they have done. Because, as you know, some other analysts have argued that the Naira is actually undervalued by as much as 25%. So they are saying that it's overvalued by up to 30%. Okay. Some have said on the back of purchasing power parity, we are looking at on an undervaluation of close to 25%.
Okay.
For me, on the back of just the fundamentals, the macroeconomic fundamentals we're seeing right at the moment. Very strong, foreign reserves. The fact that, oil prices have held steady. The fact that, inflation is dropping and all of that. I find it difficult to believe
this report.
reports.
We'll wait and see how maybe other reports that will come out and probably see where the Naira will land for the last quarter of 2025. And thank you so much, Mr. Amolegbe. You're the CEO, MD of Arthur Stevens Asset Management. Thank you for sharing your thoughts on capital market with us this evening.
Pleasure was mine.
And that wraps it up for this edition of Capital Market. Remember, whether the markets are bullish or bearish, knowledge is always your best investment. Keep watching, keep learning, and keep improving your financial savvy. I'm Willie Bond. I'll see you next week.